Hey, what's up, traders? Todd Gordon here, tradinganalysis.com and Inside Edge Capital. Hope you're well. It's June. Don't think the summer trading doldrums are here just yet. We're getting some interesting movements here. We're going to take you through quickly we'll do NASDAQ. We'll do two key growth stocks. I want to talk about bigger picture growth value ratio and show you where I think we are now. I think there's another move coming. Probably go quiet and then fireworks into the end of the year. So let's just go in that order. Let's go like this. Here we go. Okay. Big picture technology. So we're looking at tech versus the S&P. And this is over the last 2 years. So here's 22. Here's the move up in 23, the sell off in 23. And then we just continue to move higher. So this is technology compared to the broader market. What's interesting is you go tech into equal weight, we've just been sideways. So it's not just large cap led. It's XLK, RSP, equal weight tech have been sideways for all of this year. So it's a more broad-based rally. But before we get into the bigger picture stuff, before the specific, I want to do bigger picture, look more at this ratio stuff, because this is something I just got done. We do a monthly VIP for all of our members and people who've bought our products. And I also covered this in Flash's First Word, which is a live stream I do every morning for our members at Trading Analysis. And I just wanted to show you this quickly. This is something that we looked at in the past, but it's so incredibly relevant. So the blue line is the value growth ratio, Vanguard value growth. And as the blue line's moving lower, the value ETF is underperforming the growth ETF. Said differently, as the blue line's moving lower, growth on a relative basis is doing better than value. And that's been the case through 2006, 12, 16. And then, when the pandemic hit, interest rates, which are here in orange, started to spike. And what that does is that drives a rotation into value and out of growth. I'll come back. Okay, and that's what you're seeing here from 21 up until late 22 is a move into value, out of growth. Well, you could clearly see there's a correlation between the group, right? As rates have been dropping, the market has been rotating into growth and out of value, because the valuation question, do you want to hold higher valuation stocks, a greater multiple of forward earnings when interest rates are going up, and you can make a better yield, you can make a decent yield without the embedded inherent volatility and risk that the company doesn't perform. So when you have higher rates, it makes that argument hard to make, right? But what happened is, okay, we got a little hesitation here in 2022, and then growth went right back at it, even though rates went up to a new high. So 10-year yields went just shy of 5% over here on the left scale. We've backed off. We came back at it. We just did a 786 retracement of the high in yields. And all that did was give the value growth ratio pause. Here we are, guys, at a triple bottom in value growth. Now, which way do we go? We'll see. If rates had their way and this long-standing correlation was still in play, it would say that value bounces and growth sells off, and that is going to almost definitely accompany a stock market sell-off. Or is it foretelling rates are going to drop and catch back down to where value growth is going, which, again, make no mistake, if this triple bottom doesn't hold, growth is outperforming value and the stock market rallies. Where does that go with rates? That's a long conversation, has to do with the 10-2 yield curve, where the Fed's going outside of the scope right here. But I think that this triple bottom breaks. We continue the move into growth, which, those companies are, the companies, I just had this up. Let me see if I still have it. I closed it. Anyways, the guys in the growth are your big NASDAQ stocks. It's Nvidia, it's Microsoft, it's all the top. Google, Meta, Nvidia, Microsoft, and actually in the value side, it's Apple, it's Broadcom, it's Exxon, it's UNH, it's more conservative value stocks. Okay, so where that takes interest rates, we'll have to see. Okay. Now, what I also find interesting is we look at the relative rotation. Here's monthly, here's weekly. As I scroll this through, and we have this move down in the value growth, which means growth outperforming value. The left chart is the monthly relative rotation. You can see that growth went into the driver's seat right, pretty much right here, as growth went above into monthly improving, and value over here left leading and went down into weakening. Okay, so that was like right here. And then here's the weekly guy who's going to be more hyper than the longer term monthly. And what's interesting is we tried to get a weekly rotation into growth back here at the end of 23, as monthly is well in the driver's seat. On the weekly, it's kind of messing around in here. It tried to rotate in, got stuffed, went out. And this right here, you see that move down in growth, in value. That's because of this move up here in yields. Look at the orange. See the move up in yields? That's driving the move into value right here out of growth. Well, yields have just started to hold resistance as value growth ratio is broken down. Look at the weekly. It's giving us a hook in weekly weakening, which is it set to do what it tried to back here in 2023, which is see that big hook on the bottom right? Growth tried to really move in on weekly, weakening back into leading, which is going to further propel the monthly. It got stuffed, as I just described, and now are we trying again? So are there going to be fireworks heading into the end of the summer, or into the summer, I should say, that has growth move back into favor, which would further keep the growth out on the left side, which again, don't forget the significance of this triple bottom in growth, value growth ratio, which if we break down, I mean, that's a 3-year bottom that we're breaking down from, right? So, where's the NASDAQ? I'm tracking two main interpretations, and I don't want to get too much into it now. One is we're going into a generational technology bull market, which I can't tell yet, or we have something still bullish, but not as life-changing as the late 90s into 2000, which would be, it is a 5-wave move up off the lows, and we have resistance about 9 to 20% above us, be about 7.5%, 8%, 18, 19%. At that point, we would then move into a corrective pullback. Can't tell yet. And there's more that's going to go into making that decision. Okay. But if we look at, we look at some of the longer term stocks, like look at Apple. The sentiment just got so bearish on Apple in here in 23 and in 24. Like, guys, we're what, $3 from an all-time high in Apple? Okay. Maybe Apple, money in the market's pricing in something that Apple's got, cooking on the AI side that, we don't know about. So 100% 3v1's at 260, and then the 161 I don't even want to say because you're going to laugh, but that's a long ways out. Okay. So that's Apple. And it was really just a flat correction, which is, if it's a wave 2 flat, that's indicative of a lot of coming strength. And that suggests that might be the case. We're long a bunch, I've Apple, we're long a bunch of Nvidia, and the Nvidia wave count since April has been a little nasty. It's kind of hard to count. I've got a version that I'm not super proud to put in front of you, but it's okay. We're working a 1300 zone target in Nvidia to complete a higher degree wave 3. Let me get off the daily and just go down here, clean this up a little bit. Yeah, so we're looking to get up into this zone up here, and then we'll figure out where we're gonna go from there. But Nvidia, as we speak, is breaking to new highs, new all-time highs right now as I record this video. Okay, another stock on the comm side that I really like that we hold in our I hold in wealth management and in our active ops portfolio trade analysis is Spotify. They just made an announcement they're raising their prices, and the stock responded very well. So I think Spotify, for other reasons, their advertising figures and their subscriber growth is a good tell on the state of the consumer. And basically, let me just get you out of there. I'm looking for the remaining strength here in wave 3 that will likely give us a wave 4 sell-off before we go up and make new highs in Nvidia. That's the weekly, sorry, it's Spotify. I've got Nvidia on the brain. So we're just looking to get up into the 336 area in Spotify. And again, we're long from 289, just a little position trade. We're going to move the stop up behind it. In fact, we need to do that now. I'm going to move the stop up to entry, and then we'll try to get up to the 360. So, okay, guys, that's just a quick look at the XLK SPY ratio, XLK RSP, tech cap weighted versus equal weight, looking at the value growth ratio, looking at the triple bottom, which is super key over the last 3 years. Look at the rotation. We talked about the move up in interest rates, how they failed. We look at the NASDAQ. We looked at Apple breakout. We looked at Nvidia upside targets, and we finished with Spotify. We did a lot in 11 minutes. If you're still here, give me a thumbs up, thumbs down. Say hi to me. Tell me what you're trading. Tell me what you'd like to see next, and I wish you all the best. See you guys around. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section, and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.